All right. In the meantime, this JPMorgan miss had a lot of people wondering, as it goes and as Jamie Dimon goes, so go the rest of the market. Let's get the read from the Wall Street Journal Global Economics editor, John Hilsenrath. I mean, it wasn't an awful report. It was just telegraphing a mild miss, but it was a miss. And I'm wondering if that set the stage for this slowdown talk you keep hearing about that, oddly enough, might be done helping the market today, at least stocks today. What do you think?
Well, in terms of the numbers, $7 billion in profits. Boy, I would love to be in that position.
Absolutely, right?
But they did miss estimates, and I think the tone
and guidance going forward,
and guidance, and I think the tone of Jamie Dimon's comments are also something to wake up to. He talked about the first quarter being flat growth-wise if this shutdown continues, and I think that's a bit of a wake-up call.
Do you think it's a justified wake-up call? I've heard of some of the estimates, Moody's and others, talking about 1/10 to 0.2%. But to wipe out any gain at all because of this, it is, as owner says it is on, folks, it is a quarter of the United States government, isn't all of it.
So the White House has said you take out about 1/10 for every 2 weeks. If it lasts the whole quarter, say that's around 10 weeks, so that's a full percentage point of growth. Yeah. So it kind of depends on what your estimate was going into it. Some people are saying 2%, so maybe we end up with 1%. I mean, the one thing I can tell you for sure is, we wrote this last October. The economy was setting up for a slowdown after really strong second quarter, really strong third quarter. I got some unhappy reader emails saying, don't be so downcast about things. But it does look like we're getting that slowdown in U.S. economic growth. And, you have to wonder how that plays into two really important negotiations that the president is in the middle of right now. One is the shutdown with his own Congress, and then the other is the trade talks with China. We have deadlines looming on both of those fronts. March 2nd is when they have to come to some kind of agreement on the trade talks with China. And then, of course, they have to come to some kind of agreement on the shutdown. I would say there's some real major upside risk if the president can do deals. He's supposed to be a deal maker. If he could do a deal with China, do a deal with Congress, these markets could be off for the races. But if they keep kicking the cans down the road and we continue with this period of uncertainty, then slow growth and an uncertain outlook on these negotiation fronts could make for a tough quarter for investors.
But as we said at the outset, John, the market seemed to be factoring in, and that was before today, that judging by Fed funds futures contracts, that there are going to be no hikes this year,
right?
Let alone the two that the markets had sort of built a consensus around during the holidays. So where are we on this whole debate about whether this is good or bad? For now, well, good for the stock market.
So, I mean, there's a couple of ironies here. One is, the president really spent a lot of time criticizing the head of the Federal Reserve last year, Jerome Powell, for increasing interest rates. It turns out that Jay Powell is sympathetic to a lot of the concerns that the president had. And, they've signaled that they're on hold for now. The Fed is concerned about what's happening in the markets. It's concerned about a global slowdown. We just got soft PPI numbers, inflation numbers today. The Fed's in no hurry to raise interest rates again as long as the inflation numbers are slow. And so that plays into, the market's hands. That's a positive note. But the other thing is, if the Fed isn't raising rates because the economy doesn't look good, that's not really something to get very excited about. You would get excited if the Fed was saying, hey, we have strong growth but no inflation, so we can keep rates where they are. If the Fed says, well, we don't have inflation, but we're really worried about the rest of the world and markets, I mean, there's only so much rally I think you're going to get out of that kind of message.
We'll watch it. John, always good seeing you, my friend. Thank you very much.
Thank you.
John Hilsenrath.